Hey everybody, Chuck Barone here. Tuesday, October 25th, 2022. Back to the office today after a nice little 3-day weekend. I needed it. It was good to get away, and I'm feeling pretty strong today. As always, want to thank everybody for their support for the show. We appreciate all you guys do every day. Your likes, comments, questions, shares, and we appreciate your guys' support very much. In the markets today, well, markets are had a strange day today. I think everybody's waiting to see what happens next, except the stock market. Stock market rallies again, third straight day, a nice little rally. The Dow up well over 300 points. Everything up about 1.5% today. Good day for stocks. How long can this last? I don't know, guys. I guess the earnings were good today. We had good earnings for several big companies. This is a huge week for earnings. I guess American Express and a couple other companies came out with good earnings. So that's keeping these stocks going. If companies are earning money, that's how the stock market works. I mean, sentiment's important, and if people believe the prices are going to go down, that's important too. But earnings are what drives the market in an ordinary market, and earnings are good. So what are you going to do? The bond market today actually rallied as well. This market's been really in bear territory, but nice little rally today. 10-year dropping 12 basis points down to 4.10 yield. The 2-year dropping just 3 basis points to 4.46% yield. The inversion's narrowing. It was even narrower actually, but the yield curve's still inverted. Every bond now the Treasury puts out is over 4%. We'll see if it is at the end of the day. I haven't seen today's prices on the 6 months and the T-bill stuff. But rates are going up and they're going to stay up. So we just got to get ready for that, guys, right? The dollar today down pretty good. Down to 110 on the index from its peak of 114. Down almost another full point today. Well, the dollar, I don't really know a lot of times what causes these gigantic moves like this. It just seems like the market just doesn't have any sense of where it's supposed to be going. People are buying and selling on rumor. I think a lot of foreigners now are selling dollars to try to support their own currency, which will drive the dollar down. Regardless, dollar down today. Metals up small today. I thought really metals would have a little bit bigger rally today with the dollar getting hammered again, but small rally better than a decline, right? Gold sitting at $16.54, up $3.50 last I saw. Silver $19.45, up 14 cents. So metals are holding their own. I think that the strong dollar really should have knocked the heck out of metals, and they've been down, but not in a dramatic way like some other stuff has been, real estate. But metals are holding their own. I'd like to see a nice little pop here. I think that if the dollar continues its descent here back to a more normal number on the index, metals are going to rally. Oil today up small, $84.93 for a barrel of West Texas Intermediate. It looks like oil is back in that 80 to 85 trough. Nothing spectacular. I think that despite the best OPEC Plus can do, in spite of all the conditions around the market, this is still an elevated number for a barrel of oil, but it's not skyrocketing higher, and that's, at least for us in America, gas users, a good thing. Natural gas today, wildly gyrating still, $5.65, up 8.75% today. So the moves at natural gas every day have just been unnatural. You've been getting moves between 5 and 10% up or down every day. That's not a traditional trading pattern for anything. Those, for lack of a better word, violent moves, I don't know. Again, it's just a sign of confusion, a sign that, people now, what's moving the market now is hope of a Fed pivot and rumor. That's what's working. Bitcoin had a nice little rally today, up $735, breaking through 20,000 to 20,074. A good looking rally for Bitcoin. For you fans out there, if you're looking to dump some Bitcoin, this might be your chance. 20,000, hopefully it can hold that number now. In business news, you guys need to know for your investing, report came in today that business borrowing for equipment, so this is manufacturing, has expanded again, growing 11% in September. So companies are borrowing money to expand their businesses, to purchase new equipment. This borrowing shows that businesses, at least the manufacturing, people who are purchasing equipment for their businesses, are doing okay. Companies typically are not going to borrow money to expand or even to replace equipment when they feel like business is bad or business is going to get bad. So this is a positive sign for the economy. Again, we're just getting so many mixed signals on what is going on in the world. I think if you take real estate out of the picture, though, the overall economy is not really terrible. Thursday, we're going to have the GDP report come out. It's going to come out over 2%. The ranges are anywhere from 2.3 to 2.9%. I think that throws a wrench into all the recession talk. I think GDP, these reports now are getting to be a little bit misleading because I think the first two quarters, the reports were negative, which convinced me and everybody else that we were in a recession. I think those reports might have been a little a little bit too much of a negative influence and made the economy look worse than it was. And I think this GDP report, coming in at a positive over 2%, is going to make the economy look better than it is. So I don't know if I would be using GDP reports as any kind of trading indicator. I think that the Fed is going to kind of discount this report. They're going to look at their consumer, whatever they do, the consumer purchasing index or the consumer personal expenditures thing or whatever they look at. So it's going to be interesting to see how the market reacts to that GDP report, though, because the reactions to the negative ones have been pretty dramatic. Let's see if we have any kind of positive reaction to this, or if everybody's just going to look at it like, what a load of crap, right? Housing market, well, guys, this market is just toast. It's continuing to get worse. Everything in real estate looks terrible right now, every single thing of it. 83% drop off in refis, which is putting mortgage companies out of business. A lot of companies built their entire business on refi. Well, now they're all gone. Who's going to refi at these rates when we've had rates in the threes for so long? So that's all done. Real estate itself, horrible. Sales dropping, sales prices dropping, sellers freaking out, dropping their prices, people actually willing now to take losses on real estate rather than hold real estate. Inventories are rising. And the worst thing of all, what's really killing this market is affordability issues. Everything's speeding up. The market in decline is really starting to just look like crap. Today in Las Vegas, interest rates are touching 7.25%. So let me give you guys an idea of what this means, right? 7.25% interest rate. Right now the median price is $450,000. So if you take a typical buyer, they're going to put 5% down. Every example you'll read about in the media is always a 20% down person, but not a lot of people have $90,000 to put down in a house unless they've sold one and they're moving to a newer one or a bigger or smaller, whatever. But first-time buyers typically do not have $90,000 down. So if you buy a house at the median price with 5% down, you're looking at a payment well over $3,500 a month, which is impossible. People cannot, not only can they not pay that, they can't get a loan for a payment that size. Because even if you take household income, which in America is $70,000, okay, so what is that? A little less than $6,000 a month? Well, when you go for a home loan, they're going to give you at most 50% of your income for your house, your car, your credit cards, and any other student loans and debt like that. Well, if you got $3,500 just for your mortgage and your monthly income is $6,000, guess what? You don't qualify. So that's where we've been for the last few months in this business. Even when rates in the sixes, people were not qualifying. But here's the really, really scary part, okay? If the median price falls from 450 to 350, okay? 350,000. So if the median price drops $100,000 from here. Let me calculate out a payment really quick just to give you guys an idea of what kind of disaster these rates are for real estate. Okay, so we're going to go with the median, we're going to go with a purchase price of $350,000. We're going to go with a prevailing rate today of 7, let's just go 7%. No sense getting into the extra, okay? Got a 30-year loan, a 720 FICO borrower, so a high-quality borrower. If you put in the taxes and insurances, you're looking at a payment of $2,740. That's if prices come down $100,000 from where they are now. And guess what? Even at $2,740 a month, first-time buyers can't qualify for those loans. So what the heck is going to happen with real estate? Crazy times, guys. Crazy times. Another report today I thought was interesting. The leading indicators, which comes out, it's the conference, or the company. Leading indicators falling again. It's down 2.8% since March. The senior director of economics of the company that does this indicator polling said that, here's the quote, persistent downward trajectory in recent months suggest a recession is increasingly likely before the end of the year. Okay, so what's happening now is consumers are believing the recession is coming. They're starting to do the things, although saving money is not one of the things they're doing, sadly, but starting to believe this recession's coming and acting accordingly, leading indicators showing that decline. And to finish the show today, you know I like to do this little thing I call further signs of the apocalypse. When I see something that's just so outrageously stupid, well, here's today's further sign of the apocalypse, okay? They said, a new study from Northwestern Mutual, they said that the average American will need $1.25 million put away to retire comfortably. I don't want to laugh, okay? Because what they're trying to, I mean, really, is that realistic? You have to be a millionaire to retire now, or to retire comfortably? This is just craziness. Now, I went and looked it up because I wanted to see how realistic is that number? How many people are going to have $1.25 million when they retire? Right now, the average balance in the retirement accounts of Americans is $89,000, down from $98,000 a year ago. So people are not only not adding to their retirement accounts on average, they're withdrawing from them. $1.25 million to retire. So what that basically is saying, if you translate it, is you don't get to retire? You know, I mean, what kind of crazy nonsense is that? Anyway, guys, that's the end of it for today. Hopefully tomorrow there'll be something a little bit better to report on that's not all this negative steaming pile of crap we've been talking about for months on end here. The sun's going to shine again, don't you guys worry. Take care of each other and your families. Try to enjoy your time doing the simple things, the things that don't cost a friggin' bunch of money. And you'll find not only is that a very satisfying life, it's a much more inexpensive one. Anyway, guys, I appreciate the support. We love you. If you like what you're hearing, hit the like. Share this video with your friends and subscribers. Ask your questions and comments. We appreciate it. We'll be back again tomorrow. Until then, guys, take care. Thanks.